Chapter 6, the Trial Balance. What is a trial balance? It is a list of the balances on each account extracted from the ledgers at a particular date. Now its purpose is to check that the total of the debit balance is equal to the total of the credit balances. Now this is important. The principle of double entry determines that the two totals should agree compulsorily, and if the totals do not agree, then there must be an error somewhere in the bookkeeping. Now, how to prepare a trial balance? First, balance all the ledger accounts, including the cash book. Then, list the accounts with the debit balances and those with the credit balances in separate columns. Then, take the total of the debit balances and it should equal the total of the credit balances. And if the totals or equals the trial balance, then it agrees. Now what to do if the trial balance fails to agree? Look for the cause of difference on the trial balance by doing these following simple checks. First, check the additions of the trial balance. That is just checking the totals. Second, if the difference, that is between the total of the debit and total of the credit, is divisible by 2, then look for a balance that is equal to half of that difference, which may have been entered on the wrong side. Or if your difference is divisible by 9, then two figures may have been transposed in a balance. Third, if you still haven't found the cause of the imbalance, then go back to the start and check the balances on each of the accounts that you may have transferred them correctly to the trial balance. Now, let's see the limitations and errors. What is the limitation of trial balance? It is that unfortunately, even if the trial balance agrees, it does not mean that there are no errors. It only proves that for every debit entry, an equal credit entry has been made. Now this becomes problematic because you see that you have followed the steps and posted all the right things correctly, but still there are errors which you can't even see because it doesn't affect the trial balance. And so it is very important to understand and take a note of these errors. Now, the types of errors are: first, error of omission. This is when a transaction is omitted completely from the books and it results in neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered in a book of prime entry itself. Second, errors of commission. This is when a transaction is posted to the wrong account, but the account is of the same class as the account to which the posting should have been made. Note, should have been made. For instance, the payment of a telephone bill is posted in error to lighting account, and telephone account and lighting account are both expense accounts, that is, they are of the same class, but still it has been posted to the wrong account. Third, errors of original entry. This is when a wrong amount is entered in a book of prime entry for transaction. For example, a sales invoice of $200 is entered in the sales journal as $20. Now, this can happen very frequently, therefore, it is important to be focused while posting the entries. Fourth, complete reversal of entry. This is when an account which should have been debited has been credited or vice versa. For example, a payment received from Mona is debited to Mona's account and credited to the bank account, which is wrong. It should have been the opposite. Next, errors of principal. This is when a transaction is posted to a wrong account which is not of the same which is not of the same type as the correct account. For instance, uh, the payment for petrol for a vehicle has been debited to motor vehicles account. That is a non that is a non-current asset account instead to a motor vehicles running expense account, that is an expense account. Next, compensating errors. This is when two or more errors cancel each other out. For example, an invoice for $2,200 in the sales journal is posted to the customer's account as $2,000, and at the same time, the sales journal total is understated by $200. Then the debit balance on the customer's account and the credit balance on the sales account will both be understated by $200. Now, it is really important to consider these types of errors. Just because the trial balance is balanced doesn't mean that everything in the ledger is correct. And also, there can be questions where they give you an example of the error, that is a transaction, a wrong posting that has been done, and you need to identify which type of error it is. So, it is very important that you fundamentally understand this concept.